As we all know, the election is right around the corner. The race is as tight as ever, and of course, we have to talk about it on Sustainable Sense. So, in the last part of the election series, we'll be looking at the effects on the stock market, particularly investing in energy stocks as we head towards the 2024 presidential election. Whether you're leaning towards traditional oil and gas, or you've got an eye on renewable startups, this space isn't for the faint of heart. Elections, global events, and policy shifts can make the energy sector feel like a game of whack-a-mole, with surprise shifts around every corner. Welcome to Sustainable Sense, where we invest in climate defense. You're in for our hot take on all things money, markets, and the environment. Take what happened after President Biden's big climate law, the Inflation Reduction Act, squeaked by in Congress in 2022. Everyone expected renewable stocks to skyrocket while fossil fuel stocks would probably tank. But the opposite happened. Clean energy stocks faced challenges with rising interest rates, inflation, and supply chain snags. People even hesitated over electric vehicles, while Russia's invasion of Ukraine pushed oil prices up, and oil companies cashed in U.S. oil production hit new records. And in 2 years after that climate law, clean energy stocks, like those in the iShares Global Clean Energy ETF, dropped by about 37%, while traditional energy stocks like ExxonMobil and Chevron went up by around 14%. It's been a wild up and down ride, and it's not going anywhere, especially with the election looming. But what's interesting is that more and more companies are genuinely preparing for a low-carbon future, and you can see it in the data. So now, the upcoming election is adding another layer of uncertainty to this mix. Energy is one of those sectors that's super sensitive to political swings. If we see a Democratic win, the government's push towards decarbonization and ESG-friendly policies will likely stay on track, creating a more welcoming environment for sustainable investing. A Republican win, on the other hand, could mean headwinds for renewable energy, with possible backlash against what critics call woke investing. But here's where things get interesting and unpredictable. Say Trump takes the White House again with a drill baby drill approach. And yes, he did say this. You might think this would be a home run for big oil, but that's not necessarily the case. According to Rob Hawthorne, an investment strategy director at the US Bank, if we overproduce oil, it could actually hurt profits as prices fall. In recent years, oil companies have shifted from maxing out production to focusing more on returning cash to investors, so a massive ramp-up could mess with that balance. And then there's the topsy-turvy nature of the presidential race itself. Just when it looked like Trump had a smooth path to nomination after Biden's debate in June, Biden stepped aside. Now, Vice President Kamala Harris is in the running, and after a strong performance in September, she's looking like a serious contender. Harris has even eased up on her previous stance against fracking, which could mean a more measured approach toward fossil fuels if she takes office. Okay, let's hit pause on the heavy stuff for a second with a quick trivia break. Did you know that the first electric car was actually invented back in the 1830s? Yep, even before gas-powered cars were mainstream. Now a trivia question for the listeners. Which country is the largest producer of solar energy in the world? We have A, the United States, B, Germany, C, China, or D, Sweden. That's United States, Germany, China, or Sweden. Stick around for the answer at the end of this episode. Now back to the show. For those invested in clean energy, there's a lot riding on the Inflation Reduction Act, or the IRA, as we look into the future. If Harris takes office, we can expect the IRA to keep moving forward. This law has been a major boost for companies like First Solar, which saw its stock rise over 15% after the September debate. A Harris administration would likely stick to the IRA's framework, while possibly adding regulations around fossil fuels, though any extreme moves might end up tied in court battles. Now, if Trump wins, the situation becomes a bit murkier. He's been vocal about wanting to repeal the IRA and has poked fun at renewable energy sources, calling ESG radical left garbage. But full repeal of the IRA might be harder than it sounds. Sasha Mackler from the Bipartisan Policy Center suggests that the IRA has built up enough bipartisan support, especially in red states benefiting from these programs. that undoing it would be a major challenge. The most vulnerable parts of the IRA might be the EV tax credits and the Green Banks Fund, while incentives for tech like carbon capture and clean hydrogen are likely to stay intact. Columbia Threadneedle's Natalia Luna thinks the market may be underestimating the impact of the partial IRA repeal. This could mean fewer tax credits, tighter funding, or more relaxed emissions rules. With so many political moving parts, the best approach might be to keep a level head, focusing on individual companies and avoiding swinging too wildly based on election outcomes. As Brett Castelli from Morningstar puts it, investing in energy isn't as simple as picking an ETF and calling it a day. This sector's intense competition makes it crucial to select companies with not only exposure to clean energy growth, but also a competitive edge to maintain profits as competition heats up. So, as we look towards the 2024 election, it's clear that energy stocks will stay unpredictable. Policies, conflicts, and public sentiment will continue shaping the space, giving us a mix of challenges and opportunities. But that's the thrill, right? I've personally invested in some energy stocks, and since the beginning of the election season, things have been fluctuating like crazy. But with a little bit of strategy, focus, and patience, it is possible to navigate this landscape wisely. Whether you're all about renewables or you still see value in traditional energy, there's a fascinating journey ahead as the sector evolves. And who knows, we might just see the next big growth story unfold here. Oh, and just to wrap things up, if you were wondering about our trivia question, China is the largest producer of solar energy globally, leading the way in solar panel manufacturing and installation. Anyway, that's it for today's episode. If you enjoyed this episode, make sure to follow our show and like it up. Remember, every small step we take towards sustainability makes a difference. So be sure to subscribe for more insights into the sustainable side of economic development. You can find us on LinkedIn and Instagram at sustainablecentspodcast. If you have any questions or episode suggestions, you can email us at sustainablecentspodcast@gmail.com. Again, that's sustainablecentspodcast@gmail.com. Until next time, this is your host signing off. And as always, invest your sense in climate defense.